What is going on, everybody? Welcome back to Wrestling with Finance. It has been a while since I made a video on this channel, but I did have a viewer request talking about how to prepare to buy a house. It's something a lot of people are looking into, given the fact that there's a lot of discretionary income that has been flooded into our economy over the last year with the stimulus bills and continuing stimulus bills. And a lot of people have been making a little bit more money and getting a little bit more than they are used to before. And of course, one of the first things you want to think about, and probably one of the biggest assets, investments, and purchases that you're ever going to make in your life is buying a home, especially if you're a first-time home buyer. So I went and looked up as much as I could from my own experience and from other people's experience and what things are right now, because the housing market is changing a little bit, and the future of housing and owning a house as opposed to renting is getting a little sketchy with some of the new rules and some of the new laws and some of the new procedures that might be coming up pretty soon. But we're going to talk about all of that in this video. But before we get into all of that, I would very much appreciate it if you guys made a down payment on that like button. Just go down and click it and make it turn blue or black. It does, of course, help that mysterious, magical YouTube algorithm let other people know about this video, and it possibly could help other people by seeing this video. So thank you very much in advance for doing it. Now let's get into the topic. Right now, the market is, some people say the market is good and some people say it's a bad market in order to buy a house. A lot of reasons why people say it's bad is because of the interest rates may be going up pretty soon, and you have a lack of inventory, and the cost of buying houses is going up. So there's a lot of people who want to buy houses, but not much available for them to buy it, which means your competition in getting the home that you want could be pretty stiff. But before you can even get into that, you got to get your ducks in a row. And there are three things that you really need to make sure you have straight. That's your credit, that's your debt, and that's your income. Now, what you really want as far as your credit is concerned is you want to have a score, I would say 680 at least. You really probably want something higher than that. But if you're a person who's struggling with finance, because that's what Wrestling with Finance does, we are a channel that helps people who are struggling with finances and trying to fix them, hence Wrestling with Finance. So if you are a person who's struggling with finances, try to get your credit score up to at least a 680. Make sure you have at least 3 lines of credit open with no lates within the last 2 years. And you want to have at least 2 years with these 3 lines of credit. And when I say 3 lines of credit, that doesn't necessarily mean credit cards. It could be an auto loan if you have one that you're up to date on. It could be any kind of credit that you've taken out, any kind of loan that you've taken out that you're paying back on, that you're paying money for, any kind of line of credit that you're paying back for. Even store cards, I guess, could somewhat, they're probably going to count for a lot more in the future given the way things are going, but those will count to your credit score, because that's what banks and lenders are really looking at. They're looking at your credit history. That's what credit history is for, is to see how likely you are to pay it back. And given the fact that this is probably going to be the largest purchase you're ever going to make, hundreds of thousands of dollars, they want to make sure that they have a guarantee, or at least a reasonable assumption, that they're going to get their money back. You also want to be employed for at least 2 years and have consistent income. You don't want to have these big dips in your income. And in fact, in some cases, getting a big raise could actually kind of hurt you a little bit, because if your income shifts that much, it's a problem. Now, if you're self-employed or you're doing a lot of side hustles and your side hustle income is going up and down, that can also be somewhat of a problem. There are people who make a lot of money, but they aren't employed at a company. So they don't have like this track record of consistently getting a paycheck every 2 weeks or twice a month. So that can be a bit of an issue. But again, if you are consistent in your job, and if you've had your job for at least 2 years, then you should be okay. But you want to make sure you get your pay stubs and keep your pay stubs and have your pay stubs on hand so people can verify your income. And make sure that your information is correct too. A lot of people don't really pay attention to it, and sometimes you can have the wrong address, the wrong income, there could be errors on it. So you want to make sure also there's no errors on your W-2s and your pay stubs, and before you go present them to any kind of real estate agent or any kind of bank to get a bank loan. Now, again, if you're talking about somebody who's like self-employed, as I mentioned earlier, it's a little bit difficult. It's a little bit more difficult for you, I should say, but you want to keep your expenses down, because a lot of things that people do who are entrepreneurs, who have side hustles, or you're self-employed, is they take a lot of deductions. So you want to kind of keep those down. And the reason for that is, say if you made $80,000 from your side hustle, but you took all these deductions, so you were only paying on $50,000, then the bank looks at that and goes, well, we can only rely on you for $50,000 and not the $80,000, which means you're less likely to get the loan that you're trying to get for that kind of house that you want. So you want to kind of minimize your deductions for 2 years and maybe take the hit on that for a little bit. So you got to consider, again, moving costs. You got to consider if you need to hire people to move you, if you need to get a truck, if you're going cross country, if you need to get air freight to certain things, if you need to buy new furniture and sell your old furniture. All of these costs come into play. You also want to factor in the down payment, your closing costs, and everything else. You got to put all that together and write that number down and know that that's the number that you're going to need in order to buy this house. The last thing you want to do is to go get into this and realize, well, I wrote this big check, but now I have nothing in my account to actually move with. So get an estimate of all of those expenses and what all of those costs are going to be. Write that number down and save up that amount of money. I would say get that amount in your savings account that you're using to get ready to buy this house with. And then I would say work another month or two and get another month or two of income on top of that, so you can cover everything else just in case strange things happen, or maybe you want to bid a little bit more on a house or something. But definitely get that savings account set up that has enough money to cover the cost of buying a house. Now, I used to work at a subprime mortgage company back in the late 2000s, right before all that crazy stuff happened. And I'm quite familiar with some of the programs that used to exist. And some of them were, no down payment loans that people were getting for those adjustable rate mortgages. I never suggest doing an adjustable rate mortgage, by the way. But some people might go, well, hey, I don't have enough money to cover those down payments and those costs and everything else. That doesn't necessarily shut you out. You can look for some advantages, especially if you're a first-time home buyer. You can look for an FHA loan. If you're looking to move into a rural area, as there's a lot of government programs that are giving assistance to people who want to live in rural areas. And if you are a veteran, there are obviously GI bills and other things that go to helping veterans purchase a home. So look into those if you qualify for any of those. And even if you don't think you qualify for any of those, there are tons of programs out there. You just need to do a little bit of Googling and you'll probably find something that might match you. You also want to do a lot of shopping around as well. Title companies, they're different prices. Some people go and they just get one title company and they just accept the price. Different title companies have different prices. Different loan officers do different things to help you out or not help you out. You also want to shop around for insurance. Not necessarily, if you have Geico, they might have good homeowners insurance, but maybe Progressive or another place has better homeowner insurance. I mean, a lot of these places do offer bundle deals with your auto insurance, with your homeowner's insurance, but definitely shop around and just don't take the first thing that you're given. One of the things that I'm sure a lot of people are going to be asking, though, who are watching this video is 2021, was that, or is it, depending on when you're watching this video, a good time to buy a house? It really kind of depends. I think next year, however, 2022 might be a better time. Now, if you're somebody who's just starting out and you're just trying to figure out and looking up information and you happen upon my video, it's probably going to take you a couple months to get all the money together anyway. And by that point, you'll probably be into the 2022 market. Now, the reason why I say it might be better is because a lot of COVID restrictions might have eased up. Supply chains that have been part of the reason why home prices have gone up, a lot of that might be corrected. You might see a lot of market correction just from the big fluctuations from the stimulus bills. And what that means for you, if you are the average home buyer, you're a middle class person or a working class person trying to buy your first home, is that right now you're competing against people with a lot more money. If things kind of stabilize and normalize in 2022, things will be more advantageous to you. You're not going to be competing for a $200,000 house with somebody who's trying to buy their fourth $200,000 house because they're taxing the rich guys more money on the rich properties. So now the rich guys are just trying to buy a bunch of smaller properties, which kind of pushes you out of being able to own a home. So hopefully a lot of that, which has been going on a lot lately, I have a friend in Lake Tahoe who's been talking about that. A lot of that's going on in Tahoe and a lot of other places around the country where a lot of these middle class homes and working class homes are being bought up as investments by people with a lot of money. And that's one thing also I want to kind of tell people: if you're buying your first home, consider this more of your home than an investment. Yes, it is an investment. Yes, more than likely the value of your home is going to go up over the time that you're living in there, and you can make improvements and everything else. But really consider this not a money-making scheme or something that's in your portfolio, but really this is where you're going to live. This is where you're going to rest your head. This is where you're going to hang out with your family and friends. This is where you're going to have some great moments that you're never going to have anywhere else, and that you're always going to remember for the rest of your life. Really treat it that way, and you'll probably be a little bit more at ease than constantly trying to, ooh, how much is this house going to sell within 10 years or 5 years when I want to resell it? Really consider it to be the place that you're living at, and not something that you're trying to get so you can make money in the future. But that doesn't mean that you can't make improvements, and keep that in the back of your mind. You can always make improvements on homes. I'm definitely doing it with my home, making the home improvements to the yard, or if you don't like the interior or your kitchen's outdated or whatever it is, you can always do renovations. We'll talk about that in future videos about how to get the money to do the renovations using the equity in your house to kind of spruce it up and increase the value of your home, or in this case, again, if it's your first home, really to make it your own place as opposed to really thinking about, hey, I'm going to sell this later on. That's my advice. Those are my suggestions for any first-time home buyer, especially somebody who's just trying to get into that market and getting their credit score up, and now they've got a little bit of money and you're going, hey, maybe I can buy a house now. These are the things that I think you should look more into, and you should definitely be aware of. Now, if you want to get into some actual investments outside of home investments in real estate, I do have some free stocks down from Webull. You can get up to 2 stocks. Each of them could be worth up to $2,300 by using the link in the description box below. I also have some links for Celsius and BlockFi if you want to get some free crypto by investing in cryptocurrency using those platforms. And of course, you can get 30-day free trials of Amazon and Audible by using those links down in the description box below. Thank you guys for checking out this video. I will see you guys next time as we continue to answer other user questions and talk about finances here on Wrestling with Finance. Have a good day.